Welcome to a new lesson here at FN-FOREX Academy where we learn, trade, and succeed. Before we dive in, don't forget to like the video and subscribe to our YouTube channel. Let's grow and succeed together.
Greetings to you all. So we are going to be looking at lesson 7 today, which is candlestick formations, and different types of candlestick, right? And I will be explaining how candlesticks opens and how they close. We are going to be looking at some examples on the chart. Then I will attach a video of Rainer Teo, which is a pure price action trader. I mean, somebody I've learned a lot from. I think his explanations on candlesticks are very clear and precise. So I just want to give you guys that the variety. You know, if I explain, I'll try as much as possible to explain as simple as possible, like I always do, for you to explain better. But if you don't for you to understand better, sorry. But if you don't understand, you can always check out Rainer Steele's explanations. So let's get right into candlestick formations. I'll share my screen here. So right here, we have a candlestick. We have how candlesticks opens and how they close, right? How candlesticks open and how they close. So we have every candlestick. Remember, we have two candlesticks involved. We are going to have a red candle and a buy candle. A red candle and a sell candle, right? The sell candles are red, the buy candles are green. So right here we have a green candle. Right here we have a red candle. Now what's the difference between these two candles? We'll start by their opening. So you see that this particular candle, this particular buy candle opens below. This is the opening price right here, right? And it closes above. This is the closing price right here. When it closes here, the next candle takes and start forming, right? Now this candle is green because it has opened up below and closed above, meaning that it has opened and closed up as a buy candle, right? But in a situation where the candle opens and closed below, right? I mean, it has opened and closed as a sell candle. It has opened and closed below. Remember, when the market is going up, we are buying. When the market is going down, we are selling. So if a candle opens and closes above, it is a buy candle. That's why you always see it with green. Except that you customize your pictures, the colors of your candlesticks, and try to put your buy candle maybe purple. Decide to put your red candle, maybe your sell candle, maybe pink, like some girls will do, right? But these are the main colors for the financial market, and the green candles are the buy candles, the red candles are the sell candles. And it is determined a buy candle when it opens like this and closes above. It is determined a sell candle when it opens and closes below, right? Now, these candles has different parts. This is the body of the candle. This is the full body of the candle, and these are the wicks. These are the wicks. Now, what does this wicks mean? Because clearly you see that it opens here and closed above here, right? The market is going like this. So when it opens and closes, it closes this at this from this end. When it closes from this end now, the beginning of a new candle opens. Now, if it's a 15-minute candle, after 15 minutes, the next candle is going to open. If we are on the 1 hour chart, after 1 hour, the next candle is going to open. I'll explain that better on the chart. But let's come back to this, the wicks. This week simply means that the market opened, when it opened here, it went down to this level like this as a full candle, right? It went down to this level as a full candle. But now, buyers were able to push the market back to the open price, then above the open price. That's when it turns to a green candle. But when it opens and goes down, it is red. That's a sell candle. It has opened, it has gone down. But it did not close below. It went back open price, then it closed above. That's why we have this long wick here, right? So basically now this wick is simply telling us that the market was once down here, but it went back to open price, then went above. This wick above here is simply telling us that the market was once up here, then it went back and finally closed right here, right? So this therefore means that it went up there, then came back, then maybe the time frame for this particular candle cut it short, and it goes to the next candle. Then we go now to the sell candle right here. The sell candle opens above, right? As it opened above, it goes down. First of all, going up, right? This wick here means that it had gone up from something like this, like a full candle like this. Then rejected back to the price. So if you reject it back to the price, then it goes down and finally close below. That's why we have it as a red candle. It finally closed below. This wick here signifies that it had gone down, then retrace back before closing here. So this wick is just there to make you understand that the market was once there before going back up, right? No, there's something about unique about these weeks. We call them rejections. This means that the market was going down, the buyers were able to push the market back up. This means that the market was going up, the sellers were able to push the market back down, right? So the market opens above, close below, then it's a buy candle. If the market opens right here and close above, then it's a buy candle. But if it opens here and close below, then it's a sell candle. Now let's look at the chart. Let's look at the chart. So if we go now to the chart, you're going to see that we are able to identify the wicks. Let me open MetaTrader 5. Okay, let's use MetaTrader 5.
Quick reminder, if you are learning something valuable, click the link down in the description to join our trading community to connect and grow with other like-minded traders. Now let's get back to class.
Okay, now this is our chart. We are on this pair USD JPY, right? You can see right down here we are on the pair USD JPY. The last video, the last lesson, we were looking at platforms, right? So you should be able to actually navigate through the platform. So this is USD JPY. Now USD JPY, we have the different time frames. You look at my menu, right? My toolbar right up here. You see that we don't have time frames. For you to navigate time frames, two things. You can right click on the chart and you go to time frame, right? You see that we have 1 minute, 5 minute, and all the other time frames there. You could still add it on your on the toolbar right up here. You just come to view, you come to toolbar, then you add time frame. Now our time frames are up here. So now you see that if I go to the 1 minute time frame, I want us to look at the 1 minute time frame and pay attention to the 1 minute time frame. Now, if you look at the 1 minute time frame, look at this candle forming here, right? So you see that this candle that is forming, after 1 minute, is going to close. So this candle right here closed, and this other one started forming, right? So this candle is a buy candle. You see how it's going up? It's a buy candle. So it has opened below here and it's closing above, right? So it has closed as a buy candle. The next candle has formed. This is the next candle that has formed right here. Now the next candle is going down. So you see that it opened. It first of all went up. It was green. Then it went back down to the open price, allowing us this long wick to signify that it has gone back, it has gone up here before coming down. Then it is pushing down now, right? So once it passes open price and it goes down, it is a sell candle. And if it closes below, it's going to remain a red candle. If it goes back to the open price and finally close above after 1 minute, then it's going to be a buy candle. So let's just watch and see how that particular candle ends. I'm using the 1 minute time frame so that we can actually see the movements immediately, how it opens and closes. So right now it's a sell candle, and this long wick down here shows that the market has come down here before going back up. So that is basically how candle forms on all the different time frames. If you go to the 1 hour candle, it's going to do this same movement. After 1 hour, the next candle is going to form. It's going to have an open price and a closing price. This candle has closed as a sell candle. The next candle open and goes down. So the opening price is right here, then it goes down, right? That's why we have a red candle. This was the open price, and this was the closing price. Let me remove all of these things right here so that you can see clearly. Okay. So this one right here, this was the open price. It opened here and went up, and it finally closed here. And when it closed now, the next candle take over. So the next candle now, this is the opening price of the next candle. So once it closes, is keep the next candle take over immediately, right? The next candle now, is it going up or is it going down? You get. So that's basically how candles form. So if you switch through the different time frames, you see that on the 5 minute time frame, one candle is going to form after 5 minutes. The next candle on the 1 hour, one candle is going to form after 1 hour, and the next candle forms. Now you see that these candles are formed every after 1 hour, but the size of the candles are different. That's going to depend now on the liquidity of the market at that particular time. The liquidity of the market within that 1 hour, what the market did within that 1 hour. So you're going to see some candles, high momentum candles, we call them. That's candles with huge bodies, right? Maybe to the upside or to the downside. Those are candles that have high momentum, right? Then you look at when the market has down and there's no much liquidity in the market, you're going to discover that the candles are just consolidating at one point in time. It just consolidate on the same spot or around the same price, you get. So this is basically how candles form. Now, aside from how candlesticks are formed, there are different types of candlesticks with different names, right? Different types of candlesticks with different names. So I'm going to attach a picture. I'm going to attach a picture with the different candlesticks and their different names. So, but there are two types of candlesticks. We have single candlesticks and we have double candlesticks. And these candlesticks are either going to be giving confirmation for a buy or confirmation for a sell. Like I said, I'm going to send Reina Steele's video on candlestick, well explained. I think personally, I've also learned a lot from Reina Steele as a whole. And that particular video taught me a lot about candlestick, considering the fact that I learned a lot from online itself. So that's one channel I would recommend as a beginner. You can take Reina Steele's channel for pure price action. But that video I'm going to attach right here. Do well to go through that video, learn more details about candlesticks. I personally believe he explained candlesticks in that video so well that I will not want any of you to miss out, despite the explanation I have given. But I think my explanation is good enough. I think you have understood better. So on to the next now, we are going to be starting with technical analysis as a whole, and we'll be starting with top-down analysis. So see you on the next lesson.
Create your trading account, use Exness, fast withdrawals, tight spread, and 24/7 support. Click the link down in the description to create your trading account with the recommended broker, and let's get started.